Do you know the difference between a pre-approval letter and a pre-qualification letter? If not, stick around. This is Q&A Sunday with Rich Dallas from Berkshire Hathaway, and on today's episode, we're going to answer that question. Okay, let's dive in with the first one, pre-qualification letter. A pre-qualification letter is about as worthless as this piece of paper is right here. We could take it and we could throw it away because a pre-qualification is only based on the information that the client has given the lender. The lender has not pulled their credit, has not done any of those types of things. It's just saying, hey, I make $100,000 and this is what I want to buy. Do I qualify? Now, if you're telling the truth and you actually make that amount of money, and that is what is your mortgage qualifying income, that's the key term here today, mortgage qualifying income. If you're not making it up and your debt to income ratio and everything that you say that you have is accurate, that pre-qualification letter may be good. However, mortgage qualifying income is not what you think, and that I'm going to let you talk to a lender regarding that as getting deeper into what your mortgage qualifying income is. However, if you have a lot of write-offs, if you are self-employed, if you're a W-2 employee and you work a lot of overtime and you haven't been there to justify that overtime for a 2-year span to show a history of that overtime as guaranteed or consistent, those are some of the challenges you could have with mortgage qualifying income. So a pre-approval letter is the complete opposite of that. So a pre-approval letter means that you have given the bank or your lender, your financial institution, all of the documentation that they've asked for. They've pulled your credit, they've got your W-2 or your 1099, whatever you are, and they have actually gone a little deeper and been able to verify that your mortgage qualifying income is what you say it is, your debt to income ratio is right on, and that pre-approval letter, now you have one that is actually worth something, and that's what you need to go buy a house. Now, that's the difference between the pre-qualification and the pre-approval. So a pre-qualification, worthless. Pre-approval, you should be good, does not guarantee that you're going to qualify once everything goes through underwriting, and there's all kinds of things that have to happen in order to make sure that gets to the closing table. And even on every pre-approval letter you see, it even says that on there. This is not a guarantee that the loan is going to close. This is not a mortgage application. This is not a interest rate lock. It has all those things on the pre-approval right there that says that. However, a pre-approval letter is far better than a pre-qualification letter. So if you're any of my agent friends who are listening, don't even bother sending me something that says pre-qualification, because if you bring me an offer on something that we have listed, it's not happening. I want a pre-approval letter. I want to know that the bank has pulled their credit, and every agent out there should feel the exact same way. Now, one of the other bonus tips that we're going to talk about today, and this is kind of where we get into this issue with the pre-qualification letters, is that online banking institution. I'm not going to say they're all bad, but there is one out there, and most of the online banks work this way, is that their loan officers or their sales reps, as you would want to call them, they actually get paid to start the process. So that just means that they want to get as many, it's a numbers game for them. They're going to approve 1,000 people. 75% of them might not qualify, but it's that 25% that they want to qualify. And they get paid for the person to start the process, not to actually close the loan. So let me say that again a little bit slower. Online banks like Quicken or Rocket Mortgage, because those are the same thing, those people are getting paid when you start the process, not when you close a loan. If you talk to, PNC, Dollar Bank, or Victorian Finance, or Princeton Mortgage, those people, the people that we refer you to, they don't get paid until the closing, which is how it should work, because they don't want to just write pre-approval letters. They want to write pre-approval letters that are going to get to the closing. And it's not a numbers game for them. For them, it's about relationships and making sure that everybody goes to the closing table and gets there happy and there are no hiccups. So that was shocking news for me to find out this week about the online lenders. I'm sure it's probably shocking a couple of you right now, but that is why when you tell me you've been pre-approved through one of these online banks that no one, everybody's heard of, but nobody has ever walked into, that's where the challenge becomes, that you really want to talk to someone local. We have a couple of people that we work with all the time, and we would love to refer you to them. However, on today's episode of Q&A Sunday, I just wanted to go over what the difference between a pre-approval letter was and a pre-qualification letter. Pre-qualification letter, we'll just call it garbage. Pre-approval letter, thumbs up, let's move forward and let's buy a house. And then be weary of those online lenders, because they're getting paid to start the process versus getting paid to close the loan. So I hope you enjoyed this episode of Q&A Sunday. If you have a question you want to see on a future episode, put it in the comments below. Reach out to me. My number is 412-965-6387, or reach out to someone on the team, and we would love to answer your question on a future episode. Take care.